I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, June 8th, and the choppiness in the grain markets continue. Before we get into the Tech Talk, I want to point out that we do have a USDA report out on Thursday. We do have the estimates posted on our site. You can go to bluelinefutures.com, click on this research tab, drop down free. That'll take you to it. You'll see it here, WASDE Report, June 10th. These are the estimates, and that is where you will find it. And we'll also update this when the data is released, so you can check out bluelinefutures.com after the report to see what the actual numbers were. We'll also send out an email, so if you are not on our email distribution list, come to this page, scroll on the bottom, click to sign up for your 2 free week trial. You can click and select the markets that you want, everything from crude and gold to Forex to currencies, grains, livestock, etc. So with that said, we'll kind of jump into things. The first market on today's hot list here is July corn. This is actually a 4-hour chart. The daily chart really doesn't have a whole lot of technical significance in our eyes, and honestly a lot of technicals go out the window when you get into an environment like this where weather forecasts kind of rule the day, so to speak. So take the technicals with an extra grain of salt. They are most certainly an art and not a science, and we continue to believe there's going to be opportunities for both sides, buyers and sellers. Now, the July corn we've been pretty skeptical on, especially against that new crop contract December, and with weather concerns kind of up in the air on December, we're looking for that to continue to add a little bit of premium in that market relative to the July contract. So if you wanted to, you could potentially play that spread, or you could trade the outrights as well. We do have technical resistance listed in our Daily Grain Express right near that psychologically significant $7 handle, but it's also technically significant. This is where we got that extra leg up earlier in May, and then where we broke down from in the middle of May. We're retesting that, so far failing. If the bulls can't get back out above here, wouldn't be surprised to see the market retreat back into this 650 area where you got the 100 and or the 200 and the 50-day moving average coming in. But again, ultimately, I think there's opportunities for traders on both sides of the market to pick up some money. We've seen some great intraday trading ranges, so plenty of opportunity out there. Now, moving over to the wheat market, we've got July Chicago wheat. This is something we've been a little bit more bearish on as far as our conviction goes. Wheat was trading higher the other day when we got the grains ripping higher, but it was really just retesting last week's highs when we saw corn, beans, Minneapolis wheat, etc., making new highs for the move. And Chicago wheat was just really kind of riding their coattails. We were unable to get out above the psychologically significant $7 handle. Also technically significant. This is a 50% retracement from the recent trading range. So we like being sellers into that pocket. Now there is pretty good support down here near the 50-day moving average, as well as this support pocket here. Here's a good trading range and plenty of opportunity, again, for traders on both sides of the market to make some money. If you're bullish this market, well, this is kind of the low end of the range, good technical support, an opportunity to look to the buy side. Now, we're not necessarily bullish, but we're bearish, so this is a good opportunity to reduce some of that short exposure that you may have added up near $7. A break and close below here, that is where you would want to kind of rip the Band-Aid off, so to speak, if you were bullish this market and had some long positions on, because that would open the door for potential retest to this trend line support down here. It goes really all the way back to September and last June, July timeframe. Now, wrapping things up with live cattle, we've got the December chart pulled up here. That's kind of where our optimism lies. We think these front months might be a little bit of a dead duck here until we get real fundamentals to change. We know the cash market is a stick in the mud, probably will continue to be. The Packers had an opportunity to break it, but they're keeping cash 119 to 120 because they have very high margins, and that's just the way it is. Obviously, in other years, we chew through some cattle, you'd see these live cattle prices screaming higher, but we're just not at that point. We got to chew through these cattle. Technical breakout above 130 might invite some momentum traders into the market, but from a purely technical perspective, that's not the best area to be buying. I'd rather kind of buy on a potential breakout, because if we fail here, we could potentially reset to towards the middle or the lower end of the range. Looking for that 100 or the 50-day moving average coming in here right around 127.50, 127.7 area. If we're able to defend that, wouldn't mind being a buyer at that point. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures, come to you from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.